Okay, guys. So today we're going to talk about a technique that you guys can use. You can use with any trading strategy that you have uh, to increase your position, and that's what we're going to talk about today. Um, the Limp in. So there's tons of strategies out there. The problem is a lot of times that we often miss an entry, right, guys? So that's where the Limp in comes in. You still use the same risk amount. So if it's $100 to keep it easy math, you're still going to use the same risk amount, but you come in small and then you add as it keeps working for you. It helps if it helps just like any stock. When you trade earlier in the day, it seems like that's easier trading, and it helps you to increase your position as the trend develops. So that's the other thing. And then, of course, it's like anything. You need to be disciplined in this. You got to be disciplined in anything that you do in trading in order to be successful and have consistent results. So to start with, Plan A. What do we do most times, guys? Most times we look for the best gaps in the morning, right? So we've got FRG, Oracle, GG, AUR. Those are our bullish gaps. Our bearish gaps were Solar, MU, WIN, and JPM. And then we had some miscellaneous down here that Dustin used to like to say. So then we're looking for entries, right? We're looking for gaps. These are our gap trades, and we're looking for an entry, right? The only issue with that is if there's not any good gaps, and many traders are uncomfortable with the opening volatility, but they don't want to sit to 10:30 and make while others will make money. So this is a way to get into a gap that otherwise is good quality, not in full size, and then if it starts to work for you, you enter more. So Plan B. So Plan B is to if you miss the gap, to use Plan B. And this is obviously something that you can, if you guys take good notes, hopefully you have a pen, take good notes, you could start using this as early as tomorrow, or even this afternoon for that matter. So rule number 1, you guys got a pen? Type a 1 if you got a pen and a paper. All right, Scott, Brenda. How about my new people? My people are in here for just for the day. How about Alex and Dennis? Alex, how about you? David G, David B, Don, welcome back. John, Mara, welcome. Robert, welcome. So get a pin, guys, if you want it. This is a good strategy. Plan B is to look for a solid 15-minute bar like Helena likes to do. Between 9:30 and 9:45, that's the first bar of the day. You look for a solid bar with no tails. So the open is in the top 10% of the bar, and the close of the top 10% of the bar. The open is the top bottom percent of the bar, and the close is the top 10% of the bar. So what it creates, what does that create, guys? If you got to open at the top 10, if you have open in the bottom 10% of the bar, and it close the top 10% of the bar, what is that? What kind of candle is that? What's it look like? It's bullish. It's wide range, but describe it. What's it look like? Describe it. It's bullish and it's a wide range bar. It's a wide range bar, and what does it have or not have with it besides being a wide range bar? Small wicks, no tails. Yes. No tails, no wicks. Yes. You got it. Perfect. And that's exactly what it looks like right here. This is what you want here, guys. No tail at all. This is the most bullish bar you can ever get in the market right there on any time frame. 15 obviously is even better than a 5, of course. Okay, guys, we got to trail out on CTRP at 80. And at 80 on CTRP, guys, and we'll go over these trades later for the people that came in late that want to see how we do things in here and see how we make money in here every single day. We're just kicking butt, and all you guys should strongly be in here if you're not making the kind of results we're making here, because I don't know how you can afford not to be. Um, so on the back half, that was 69 cents, and on a 13-set entry, that was 5 Rs on the back half on CTRP. We made 5 Rs on the back half on that trade. And we'll go over that in a little bit. So number one is you find a solid bar like this. That's number one, guys. You guys write this down. This is number one. Number two, you look for rising moving averages. Not flat moving averages, not one rising and one flat, not both flat, both averages rising on the 15-minute chart. And that when we talk about moving averages in here, guys, for the people who might not know, we're using the 8 and the 20 MA. So we're talking about an 8 and 20 MA moving average. You want them both rising, okay? So one, solid bar. Two, we're looking for moving at the rising average at 8 and 20 MA. Now, what's it mean, guys, if we do have a 15-minute bar on the 8 and 20? What's that look like on a daily chart? Any thoughts? You can say DK if you don't know, but hopefully you have an idea. What would that look like on a daily chart? I'm looking for some feedback in case you didn't know. What's that look like, guys? What's the daily look like if we have it at the 8 and 20 MA? What would that look like on the daily? Yeah, besides a green bar though, location-wise, what would it be like? Okay, you guys are missing my point. I'm talking about as far as gaps go. Is this going to be a stock that's gapping, or a stock that's probably not gapping as much, or maybe DK for don't know? No gap. Dennis is right. Thank you, Dennis. No gap, guys. So this is going to be a one that's not really gapping too much, right? Because if it's at the 8 or 20, if it's a big gap up, it's going to be far from the 8 and 20, right? So it's going to be hard. So it's going to be a stock that hasn't gapped much. I just wanted you guys to think about that instead of just handing it to you. Dennis, you're absolutely right on point. Good job. No gap. So how do we scan for them, guys? Everyone always wants to know about a scanning. How do you scan for them? We're looking for, the first thing we're looking for is a solid green bar. Look like this. Opening at the 10% of the bottom, closing at the 10% from the top, so hardly any tail at all. Next, we want it at the rising 8 and the 20 MA. So how do we scan for it, guys? Any thoughts? How do we scan for these? What's a good way to scan for these? Not gapping too much. What do you think? Any thoughts? Well, if you're looking at strong stocks, you might get a lot of stocks that are gapping. Helena says don't know. Yeah, you could. Dennis had a good idea. Top 10% from the open. Well, if you get the top 10% from the open, they might be big gaps, right? Hey, Al, tell me a little bit more about that. Expand on your answer, Al. Al's in the ballpark. Well, continuation, but how do you find for them, though, Al? And Anna, how do you find them? If you look at stocks that are strong stocks, there's going to be a lot of gaps. So if any of you guys, do any of you, type of 1, if any of you guys have a scanner where you can like make your own up, you can make up your own scans. Type of 1 if any of you guys have a scanner. Some people do, some people don't. Type of 1 if you have a scanner where you can make up your own rules as far as what you want. Does anybody have that? Type of 1 if you have a scanner where you can put in your own rules. Okay, just got it. Okay. Well, one way, if you have a scanner, I'm giving you an idea. If you don't want a stock that's gapped too much, right? Well, what's the first thing that we'd want as far as if we don't want a stock that gaps too much, what's the first thing we want though? What's the first thing? What's the first two things I always talk about in this room, Anna? What's the first thing? Two things if you want to be consistently profitable. What are the first two things that I always talk about? No, no. What are the first two things to be consistently profitable? Above yesterday's high, prior close, that's the entry. But above yesterday's high, Brenda's right. Brenda, good job. And also, what's the other thing besides yesterday's high? Here's your hint. I gave two guys in the room last Wednesday, people were in here Wednesday. I gave them a homework assignment to do this and come back and tell me about it. There you go. Thank you, Mara. Above the open in yesterday's high. So if you have a scan and you can put in your own criteria if you wanted to try to get a perfect scan, above yesterday's open, above the high, above the open, today's open, above yesterday's high, but not more than like 5% over yesterday's high. And you can very easily, if you have a scanner, you could very easily put that in there. And if over 5% is too much, you could say maybe not over 1% or 2% of yesterday's high, but above yesterday's open and above yesterday's open, above today's open and yesterday's high. Does that make sense, Anna? Since you have the scanner, what I'm saying? So not more than a couple percent over yesterday's high, but over yesterday's high and above today's open. That would be a perfect scan if you could create it yourself. That would be a perfect scan to find these. But what's another way you can do it? Okay, guys, here's the hint. It's staring right in front of you on the slide. What's another way you can do it? It's staring right in front of you on the slide. I can't believe no one caught it. It's on the guide. What does this slide say? It's on the slide right here. What's the list? But what's that list of? It says it right on the list. Yay, Al! Thank God Al's back. Yes, it's right here on the list in front of you guys. just scan the NASDAQ 100. We can all get that, right? I'm not being gentle, Anna. Well, it's right here in front of you, NASDAQ 100. You just gotta look. I don't know. When I said it's right in front of you on the slide, I don't know what else you could look at. So yeah, you can look at the NASDAQ 100 and go just do the top 100 stocks. Now, obviously, you're going to find a lot of them are gapping too much. Some are gapping. But what you do is you can sort by stocks above the open, above the close. See how he sorted where all these are green? These are all stocks above the open. You can also and see where it started red. So he's only got out of the 100 here, and this day he's got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, and then they start turning red. So only 16 of the 80 of the 100 were red or green at the open that day. So it looks like it was probably a tough opening, right, guys? So you can see, guys, just based on this, this was a tough opening today. There was on this open, there was only 16 out of the 100 that were green. All the other ones were under the red. So yeah, you can use the NASDAQ 100. You can use whatever you want. If you have a scanner, that would be optimal, but nothing else. What do you get, though, guys? If you use the NASDAQ 100, what do we know we get for sure? What do you get with the NASDAQ 100? Why is that a good list to start with? What do you get with that? Yeah, Anna likes to kid with me all the time. What do you get with the NASDAQ 100 by using that list? What does that help you? What does that eliminate? By using the NASDAQ 100. Well, that's what does it eliminate? You get liquidity. That's what you get. What does it eliminate? There you go, Mara. Great job. Crappy stocks. Yes. It eliminates all the junk, right? You know you got stocks that are going to trade. You know you got stocks that have volume, liquidity, like Scott said. So good job, Scott and Mara. Good job. Yes, crappy. It gets all the crap out, right? Now, what's another way? If you have a scanner, Anna, what you can do is you can scan for stocks that have at least 1 million shares. You know, that's one way to get the crap out. Okay. All right, so here, let's go ahead and move on. So, first stock, Oracle. Oracle was the first stock on the list. Guys, does this fit these two rules? Give me a yes, no, or a DK for don't know. Oracle. No, no. You're absolutely right. It doesn't fit. Helena and Dennis. They get the star. They were the first ones to. They were the first ones to comment. They get the. They get the star, golden star for that one. Okay, here we go. Get ready. Tiva. Does that fit? Ah, Bob gets it this time. No. No. Okay, here we go. Get ready. Here we go. Genzyme. Does that fit? Ding, 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 ding. Dennis. Bob. Bob is quick. Bob is on the track there. Dennis is right behind him, though. Nice. Anna doesn't want to be quick. She types out the whole word yes, so she's makes sure she's not first. Because Anna's the banana. She doesn't want to be first. Ah, Scott is always a tricky one. They got you, Scott. Scott. MAs are not pointing up. Scott always is the careful one. No, the MAs aren't pointing up. Just it almost got you though. I like Bob's quick entry, but Scott is Mr. Specific. He makes sure all the rules are being met. He's the guard dog at the door. He's the bouncer. He bounces all the bad stocks out. Good job, Scott. Yes, the moving averages are flat. So good bar. But look, guys, moving averages. Two simple rules, guys. I just asked for two simple rules, and you still everybody missed it but Scott. But I'm just kidding you. I know it was hard. Everyone wanted to jump on there. It was a trick one because you're just looking for the bar and you wanted to go. But good job, Scott. Yeah, you need the moving averages. So let's go again. Next one's into it. Here we go. How about that? Does that fit? Does that bar look like that bar? It's got a bit of a tell here, but it's not bad. See the tell here? It might be hard to see. So it's a little bit, but it's okay. Okay, so let's go ahead and move on. So now we got the bar. We got the rising moving averages on Intuit. Oh, you know what? On Intuit, we're not going to count that because that bar doesn't look exactly like that bar. See the tail? That bar is probably more than 10%. So Intuit, we're not going to catch it. It does have the moving averages, but again, it's another trick one. It doesn't match that bar perfectly. It's got a bit of a tail, so Intuit doesn't work. So let's go on to SIL. Here we go, SIAL. How about that one? Does this one fit? Nope. Bob's right. It doesn't fit. It's got a big old topping tail. So now we go on to DTV. How about that, guys? Does that fit? Be careful. Be careful. Oh, Bob's not careful. He just goes ahead. Anna, why doesn't that fit? Bob says yes. Anna says no. Bob or Dennis, whoever answers first. Why does that fit? Just because it does. You're right. Yes. Yes. It meets all the criteria. Yes. Good job. You got it. That's the first one. Yes, you got it. It opened above yesterday's high. I mean, I'm sorry. It's a big green bar. There's barely any tail at all. So DTV is the one that fits. Now let's move on. How do you scan for them? Well, one way you can look at the pre-fight checklist, right? You can look at earnings plays. Earnings are going to have good gaps, so you can look at the earnings plays. You can also look at our letter plays. Those could be ideas too. Our letter plays often don't gap up either, guys. So you can look from the letter plays as well. So there's two areas you can go besides having a scanner. This is a scanner in itself right here on the letter plays. Also, you could look at news like oil stocks, housing stocks. If you know housing and oil, that could be an area. You could look at a certain sector. So how do we play these games, guys? How do we play them? Here's how we play them now. So you know the two. You know the two criteria to find. You know how to scan for them now. How do we play them? If the first bar is erased at the 8 and 20 on the 5-minute chart after at least a 2-bar pullback, so you get the green bar, you get at least a 2-bar pullback on the 5-minute chart, or it should be a big old, hang on. Well, for some reason I can't get in there. That's weird. I thought I finally had this thing. Huh. I want to make that one bigger, but I can't get in that slide for some reason. Maybe because it's on this thing. Or over the 15-minute high. Those are the two possible entries, guys. So for the first one, we look for at least a 2-bar pullback to a rising 8 or 20 MA on the 5-minute chart. So this would be what the first one looks like. It's a standard buy setup. And this would be the second one. Same thing. This is the 20 MA right here. Same thing. Same kind of look. The 8 or the 20. Or the third one would be over the 15-minute high. And you'd use half of that bar. Your entry would be over the top of the bar. The exit would be 50% of the 15-minute bar to make it tight. So that would be your three possible entries, guys. The 8 MA on the 8 MA on the 5-minute, the 20 MA on the 5-minute, or over the top on the 15-minute using half that bar as your stop. Type a 1 if you understand the entries. Please. Want to make sure we can move on. Type a 1 if we can move on. You got those written down. Anna never understands anything. She said no. Oh no, Anna said yes. Okay, I typed up. My bad. I moved my thing up at where it said no for Anna. I thought she was trying to be a smart aleck again. Okay. Well, I thought no. Well, I clicked up here, and it went to Anna no, and I'm like, oh, she says no. Here we go again. Okay, so here's into it. Here's the 15-minute. Here's the 5. Can't do anything yet. We have to have at least a 2-bar pullback. Now into its 5-minute bar. We need at least first bar erased on the 8 or 20 on the 5-minute, at least 2-bar pullback. Here's a red bar and here's a red bar. So there's a 2 red bar pullback. There's 2 red bars. And so you can play the entry right there over the high of that bar. Your stops below that bar. You need at least 2 red bar pullback. There's 1 bar. There's 2 bars. It's a very sloppy one, but this is how you can play it. And it's similar to this. It's just not nearly as pretty. This is much prettier, and sometimes this is real life. It's not so pretty. The second entry is right here over the high of this bar, and the stop is 50% of that bar, which is right around 39 or so. So over the high of the bar, the stop is under it. Oh, and then the DTV, it pulled back, and here's at the 20 MA on the 5-minute chart. Here's another entry. This shows you the 20-minute entry on the 5-minute chart. So the first entry, guys, you could buy half a shares, or you could buy a third of your shares if it's over the 15-minute high, or a half. You could buy another half or a third on the 8 if it comes back to the 8 on a buy setup, and you could buy another third if it goes back to the 20, or wait for the 20 to get the full position. So those are the ways that you can add in, so you don't add everything all at once. Those are the different ways that you can limp in the trade. You can limp in on the 8, you can limp in on the 20, and you can limp in obviously over the 15-minute high. So it just depends what you feel comfortable with. Now here's one of the rules, guys. Write this down. Once the price clears the high of the day, do not let price fall below the 8 MA on the 5-minute chart. Once it gets over the high of the day, price, do not let it fall below the 8 MA on the 5-minute chart. Remember, guys, what do I always say about strong stocks in this room? I say it almost every day. Remembers what do really strong stocks do? If they're really strong, what do they do? And if they're strong, what do they do? If they're really strong, they hold the 8. If they're strong, they hold the 20. So in this particular case, if it gets below the 8, don't let it fall below the 8 on this particular entry. So in this case, once it trades over the high of the day, you can't let it fall below the 8. On this case, once it triggers, once it gets above here, you can't let it go below the 8 again. Assuming you don't get stopped out first. So DTV, it's got above it now, you can't let it go below the 8. It's got above the high of the day, you can't let it go below the 8. And so you can see here, here's where it went above the 8. It held the 8, held the 8, held the 8, and then boom, you get out right there. Does everybody understand that? Type it 2 if you understand that. So your entry was down here. Once it gets above the 8, it's got to hold the 8. It caught it, caught it, caught it. It still held the 8. It was touching it. And right here, got below, you're out. So you got in about 20. You got in at 40. You made about 20 cents. And your stop was about 10. So you made about 2 Rs on that one. So in Intuit's case, here's the entry down here. There's the 2 red bars. Your entry was right here. Right here. Got above the 8. Held the 8. Got above the high of the day. So it held the 8. Held the 8. Now if it gets below, well, once it got below this bar, here's the 8 right here. This is your out right there. That's your out bar right there. Guys, get that? See, it broke the 8 right there. Once it gets under this bar, it's done, and it did. So this bar gets you out right there. They're not all going to be big winners. So in this case, you got in here and you got out here. You basically stopped a break. It was about a break-even stop on that one. So they're not all going to be big winners, but you have a certain plan and you stick with it. So here's the summary, guys. Solid 15-minute bar at 9,930. Match the 8. Rising 8 and 20 MA on the 15-minute chart. The play, you buy the first bar erased at the 8 and 20 MA on the 5-minute chart. The first red bar erased after at least a 2-bar pullback or over the 15-minute high. And you can go in half or third on each of these entries. Once price clears the high of the day, do not let it fall below the 8 again on the 5-minute chart. It can get below the 8, but it can get below the 8 on that 1 bar, as you saw in those examples, Anna. But then once it got 1 bar and then 2 cents below or so, got below that after that, you got to get out. If we go back to this example here, you can see this was below the 8, but you still got to wait for the next bar. The next bar confirmed it right here, and that's what this was pointing at, so you're going to get out on that bar. You don't get out on the red bar, you get on the bar after that. You got to give it a chance to wiggle through the 8, but then the very next bar. See, this wiggled to the 8, but then it held. This wiggled to the 8, and it held. This wiggled to the 8, it didn't hold. So you got to let it wiggle through the 8 on that bar, the 5-minute bar that gets under the 8. You got to hold that bar, but then after that, the next bar, if it gets underneath that, then you're done. Okay? Make sense, Anna?